Okie doke, guys. So we are going to start with the PowerPoint, if I can load it. There it is. Okay, so activity-based costing. This is another method of how we determine what products, how we come up with a product cost. Determine the cost of a product is called product costing. We know from these other chapters, product costs consist of direct materials, direct labor, and factory overhead. Now we know from a previous chapter, direct materials and direct labor are prime costs. Direct labor and factory overhead are the conversion costs. Remember us talking about that? The direct materials and the direct labor can physically be traced to the product. But that big lump of factory overhead, all of those indirect costs have to somehow be allocated. And the problem, guys, with factory overhead, it's a big number. You know, that's a big number. It's significant. So we have to trace them or allocate them to products. But it's not always equitable how we trace them or assign them to products. That's the big issue. How much of this factory overhead legitimately should be going to these different products, the percentage-wise? The most common methods of allocating factory overhead using these predetermined rates we've talked about. You know, we have to come up with predetermined rates because we don't really know what the actual costs are going to be until the month is over and the products have already sold. So we've got to come up with some good estimate. We come up with a single plant-wide factory overhead rate method, which is easiest, but it might not always be the most clean. Clean might not be a good word. Equitable. A multiple production department factory overhead rate sometimes targets the overhead to products better. But this week, we're going to talk about activity-based costing. So based on activities, we assign that overhead to various services or products. So here you see the single plant-wide rate is definitely easiest for us to handle, but depending on what we're producing, maybe it's unfairly increasing the cost of certain products that might not be might have a harder time making profits on them because maybe it's not realistic. The multiple production department rate really narrows it down a little better and might assign them more accurately. But with activity-based costing, this method is what we're going to talk about today. Which of the following are considered product costs? Direct materials, direct labor, supervisor salaries, direct material, manufacturing overhead, and executive salaries, direct materials, direct labor, and factory overhead, right? Executive salaries, we know, are period costs, aren't they? They don't follow the products. They are on the incomes, the profit and loss in the period in which they occurred. Same with administrative overhead. Supervisors' salaries are part of factory overhead, aren't they? Under the single plant-wide factory overhead rate, factory overhead costs get allocated to all the products using just one rate. The budgeted allocation base can be a measure of operating activity. Usually we allocate the rates based on direct labor hours or usually or actual machine hours. Sometimes direct labor dollars, but normally it's by labor hours or machine hours. The advantage of using this plant-wide rate is it's easy. We like easy, don't we? But it isn't always fair. I hate the word fair. It's not always appropriate for various products. So Ruiz manufactures snowmobiles and riding mowers in a single factory. We've got our budgeted costs and we've got our budgeted labor. So we come up with a predetermined rate. So the total budgeted direct labor hours based on labor, we see direct labor hours are $10, 10 hours per snowmobile and 10 hours for riding lawnmower. So it's pretty equitable. Each one needs a certain amount of man hours. So we estimate our labor hours based on what each unit is going to require. So it's pretty straightforward. If we know we estimate our budgeted factory overhead to be 1.6 million, and we estimate our direct labor hours to be 20,000 hours, we can just figure, okay, $80 per direct labor hour is what we're going to assign to each product we're building, what we'll allocate to each piece of equipment. And if it's 10 hours each, roughly that's $800 just in factory overhead. Make sense? So in this case, if you're building, manufacturing the snowmobile or the lawnmower, the same amount of factory overhead is going to be applied to each. Which of these is the primary advantage of using a single factory overhead rate? It's simple. Okay. So Tallulah's machining department incurred $1,125,000 of factory overhead cost in producing hoses and valves. The two products consumed a total of 50,000 direct machine hours, and of that amount, hoses consumed 18,000 direct machine hours. Determine the total amount of factory overhead that should be allocated to hoses using machine hours as the allocation base. So if we take our total factory overhead and we're estimating 50,000 machine hours for everything, and if hoses are 18,000 machine hours, do you see how we can come up with an allocation per hour? Assume 18,000 hours for hoses to come up with what's going to be applied to the factory overhead for hoses. Does it make sense? Yeah, you can shake your head. Platzer Instruments makes 3 musical instruments: flutes, clarinets, and oboes. The budgeted factory overhead is $1,874,400. Overheads allocated to the 3 products on the basis of direct labor hours. we're assuming flutes are going to need 2 direct labor hours per flute, clarinets 3, and oboes 1.5. So we also know the units. They're going to make 7,500 flutes. So you see clearly here, a lot's going to these flutes. The clarinets, 3, the oboes, 1.5. So we are going to come up with the total, use the overhead rate to determine the amount in total and per unit overhead allocated to each of these products. So we're going to come up with the number of hours, direct labor hours. So we'd need to do 7,500 at 2, that's 15,000, right? 1,500 at 3, that's 4,500. 1,200 at 1.5 would be 1,800. You take the 15, the 45, and the 1,800, and you come up with 21,300 in total hours. If you take the 1,874,400, divide that by the 21,300, do you see we're coming up with $88 per direct labor hour? Make sense? So the flutes, since they need 15,000 hours, if we allocate $88 to the flutes, you see that's 1,320,000. Per flute, it's going to be 88 times 2, right? Does that make sense? Clarinets, it's 88 times 3 per clarinet. Oboes, 88 times 1.5. So we're getting the total factory overhead per instrument, and then we can break it down. Easy, isn't it? I'm just going to move on. See, when I created these slides, I want to move on so I have enough time for the end. This is the same example though, guys. Okay. Now, when we do a multiple production department, maybe a little bit more intensive. The multiple production department factory overhead rate will use different rates for each production department to allocate the factory overhead. Assume Ruiz uses the following 2 production departments with snowmobiles and riders. There's a fabrication department and there's an assembly department. Do you see, instead of having this big plant-wide overhead rate, now we break down the overhead between the 2 departments. Fabrication's overhead is $1 million, assembly is 600,000. So, you know, the overhead here for fabrication is almost double what it is for assembly. So in this case, if one of those products takes more hours in fabrication, do you see how the costs are going to get assigned a little more accurately? Make sense? So in this case, we're going to break it down by department. More involved, but probably a better, more accurate factory overhead that's being applied. Because maybe in the fabrication department, fabricating the snowmobile is more time consuming than it would be for the lawnmower. Does that make sense? So in this scenario, when we assign it based on various departments, we're going to come up with probably a little more accurate or respectable predetermined overhead rate. So Ruiz uses direct labor hours as the allocation base for both those departments. The fabrication department is budgeted for 8,000 direct labor hours, while the assembly department is budgeted for 12,000 direct labor hours. So you see, in the assembly department, we're assigning only $50 per direct labor hour. But in the fabrication department, we're assigning $125 per direct labor hour. So you see on a big plant-wide rate, while we're using factory hours as our basis with one figure, in this case, factory hours between the assembly department and fabrication department is significant. Do you understand what I'm saying? These hours are only based at $50 an hour, where in this department, the fabrication, they're based at $125 an hour. It can skew the product costs. So 10 direct labor hours are required for the manufacture of each the snowmobile and the riding lawnmower. These hours are consumed in the fabrication and assembly department. Do you see here in the fabrication department, the snowmobile, oh, this is right, needs 7 hours? That's at $125 an hour. The riding lawnmower just needs 1 hour of fabrication. And the assembly department, they need 3 hours, and the snowmobile riding lawnmower is 9 hours. So in this scenario, look at the difference. That the snowmobile, the factory overhead assigned to that is $1,025 versus what's being assigned to the lawnmower is $575. That's why the more you break them down, the more realistic you can assume your cost to be. And why is this an issue? Because you might be under costing the snowmobile, and you could be over costing the lawnmower. Does that make sense? Even though those factory overhead costs are truly the same, as you allocate them to department and you narrow down on who needs what based on the department, this makes the numbers extremely different. And why is this important? Because we want to make a profit. And we also want to be competitive. But how can we be competitive when we don't know our real costs? And guys, what are our real costs? In some respects, it's very subjective. Do you understand that? But this is why, as we see with activity-based costing, we really feel like we get a true, accurate depiction of what the cost should show. So this is showing at a department level how more accurate these factory overhead costs are being allocated. So here you see the fabrication department has a lot more overhead. And so it's assigning $125 an hour. Since the snowmobile's needing 7 hours and the mower's only needing 1, the factory allocation is very different than the plant-wide. Make sense? Okay. The differences in Ruiz's company's factory overhead for each snowmobile and riding lawnmower using the single plant base versus the multiple production department is significant. With the snowmobile, we had undercut or under allocated it with the single plant-wide rate. Yet when we use the multiple department rate, we're being a little more accurate. And with the riding lawnmower, using the plant-wide rate, it was a lot higher. But by using this multiple department, we're just being more realistic at the cost for both. These cost distortions are caused because we're averaging differences between really high factory costs and low factory costs. Make sense? This is a side note. I know this sounds silly, but it's tax time. And, you know, you kind of figure out what it costs in our office to do a tax return, because we do say 1,400 a year, and I've got X number of employees, X amount of software, rent, blah, blah, blah. And you figure it out, and you can make decent money with volume. Yesterday, I'm working on a client. Of course, they gave me no dividends, some interest, but no dividends. And come to find out, he says, well, I know I gave them to you. I know I gave you Charles Schwab. Well, come to find out, there were 3 Charles Schwab accounts and 5 Vanguard accounts he didn't give me. No offense, but I don't think I would have ignored all those statements, which amounted to another, 30,000 of income. But for me, so I did his return the year before with what he gave me. Now I'm trying to fix it. Do you know how much time this takes me to fix a return? And so they get upset because I'm going to charge them to fix it because it's not my fault. If it's my fault, of course, I fix it. But I have to amend it. I have to respond to the IRS. I don't appropriate, and it hit me yesterday. The time, just my hours trying to fix this is like 4 hours, where I can probably do a tax return, a basic one, in 20 minutes. And with basic tax returns, I have my whole office helping me do them. Where with this, I'm the only one doing it. Am I making sense? So I charged them $350 to do this. The truth is, I really should be charging them a lot more, because it's half of my day yesterday was one guy's return to fix it. That wasn't even my fault. Am I making sense? I say all that to say distortion of costing with what things really cost. Make sense? I'm kind of showing you from a service side, service industry, how it's really it's beneficial to look and see what costs are involved. With most of our returns, I can put them in the computer. That's why we spend 30,000 a year on our software. It does the work for us. It makes me look real smart. But when you have to go and manually fix it all, not that smart. You get what I'm saying? It's so much more work, because I can't necessarily just put it in a computer and fix it. There's so much more involved with communicating to the IRS. Got it. Same kind of concept a little. So the following conditions indicate that a single plant-wide overhead rate may cause product cost distortions. Well, we see that now, don't we? And just think how that is in so many lines of work. Because both conditions exist for Ruiz, the product cost from using the single plant-wide overhead rate makes those products costing distorted. So you see, because of the difference in these two departments, and because of the ratios by department, it's best to use the department factory overhead allocations. Here, we won't go through a bunch of slides, but let's just look at this one. Spillman Leather produces 3 sizes of sports gloves: small, medium, and large. A glove pattern is first stenciled onto leather in the pattern department. The stenciled patterns are then sent to the cut and sew department, where the glove is cut and sewed together. Spillman Leather uses the multiple production department factory overhead rate method of allocating factory overhead costs. Its factory overhead costs were budgeted as shown to the right. So we have them budgeted here. The direct labor estimate for each production department is also shown to the right. Direct labor hours are used to allocate the production department overhead to the products. The direct labor hours per unit for each product for each production department were obtained from the engineering records as follows. So we're going to determine the two production department factory overhead rates. And then we're going to use the two production department factory overhead rates to determine the factory overhead per unit for each product. So we see the pattern overhead, the cut and sew overhead, and then our hours for each. And we see what's needed for the small glove in each department, the medium glove in each department, and the large glove in each department. So as we look here, we take our overhead of 180,000, divide that by our 36,000 labor hours. We see for the pattern department, it's $5 per direct labor hour. In the cut and sew department, 756,000 with 84,000 direct labor hours. That's $9 per direct labor hour. So again, this is significant. One is a lot cheaper than the other, isn't it? So per glove, the small glove, if they need a quarter of an hour in the pattern department and 0.4 hours in the cut and sew department, we're being a lot more detailed on what each one of these gloves factory overhead should be. Does that make sense? So there definitely should be more factory overhead assigned to a larger glove than the smaller glove, shouldn't there? Technically. The management of Nova, same thing. We show two departments, fabrication and assembly. We show two types of engines we're building. In the fabrication department, the gasoline engine takes more hours than the diesel does. But in the assembly department, the diesel takes more hours than the gas engine does. So if we allocate these hours, you can see just here, the fabrication department's costs are a lot higher than the assembly department. So there will be a discrepancy with factory overhead allocations between the gasoline engine and the diesel engine because of how much time they're taking in each department. If we based it on a plant-wide rate, it would be the $800 for either the gasoline or diesel engine. But if we do it based on if we do it based on the departments, then you see for the gasoline engine, it's a lot more. It's over that plant-wide rate. And for the diesel engine, it's under that plant-wide rate. So I've convinced you it works better doing on departments. Activity-based costing gives us another way to do things. Instead of just using hours, we use activities. Activities are the types of work or actions in the manufacturing process or the service process. Factory overhead costs are initially budgeted for activities, sometimes called activity cost pools, such as machine usage, inspections, moving production setups, and engineering activities. Or in my case, it might be tax returns. You get what I'm saying? Exhibit 7 illustrates how activity-based costing differs from the multiple production department method. In this method, we have two departments. In activity-based costing, we cost our products based on the activities, and we allocate the overhead based on activities. So here, we've got various activities. Fabrication and assembly, instead of them being just these departments, and back with the multiple departments, we just had two. Now we're breaking it down even further. We're now using activities. So one is fabrication, one activity is fabrication, one activity is assembly. But now look, guys, we have an activity called setup. We now have an activity called quality control inspection. And we now have a setup, an activity called engineering changes. So instead of just two departments, we're switching it now to activities. And look, guys, we have 5 activities for these products we're putting out there. We have our budgeted costs per activity. We come up with activity rates based on the activity cost divided by our activity-based usage. Activity base is the same as our allocation base. Okay, we're just kind of using different words. Activity-based usage for the two products are as follows. We're estimating each, we're going to have 1,000 units. For snowmobiles, we're going to have 100 different setups, much more involved. For riding lawnmowers, we're having 20 setups. For quality control inspections, we've determined that we need 10% of our snowmobiles to be inspected. But with the riding lawnmower, they're only going to do 4 inspections out of 1,000 units. For whatever reason, they've got a handle on, or it might just be an easier production. Less moving parts, maybe. And for engineering change orders, they're estimating 12 for snowmobiles and 4 for riding lawnmowers. Okay? You can follow me so far? See how they're breaking it down even in much more detail? And guys, all this much more detail costs money too. Do you see how it's more time consuming and it's more costly to do activity-based? So here we show the two products. We know the snowmobile has 7,000 direct labor hours in fabrication, where riding lawnmower only has 1,000 hours. Assembly, the snowmobile's 3,000 direct labor hours. We're assuming the riding lawnmower's 9,000. We know the setups based on what we saw in the previous slide. We know our inspections, and these are our budgeting. We're budgeting our estimated engineering changes. If we know all the costs for each activity, you see how we can come up with per direct labor hour, what we allocate to fabrication, what we allocate to assembly, the setups, the quality control inspections, and the engineering changes. It just further details the breakdown. So for Ruiz, with going back to just 2 departments, we come up with our 10,000 labor hours. In this respect, we're breaking this down at a greater level. overhead cost of each activity get allocated to a product by multiplying the activity-based usage times the activity rate. When we were doing the factory overhead, we'd take our factory overhead cost divided by our estimated units of production. So here you see, based on the activity rate method, look at the costs here now, guys, that we're assigning to snowmobiles. $1,231 a snowmobile overhead rate. And now look at the riding lawnmower. It's a lot lower. Do you see, by getting nitty-gritty detail, we're really picking the cost. What's costing us money? Well, those engineer setups cost a lot of money, and those inspections are costing money, aren't they? And you see how they're upping those prices? Does that make sense? So when you do it this way, the snowmobiles now, what's been allocated for the activities are showing a lot higher, and probably much, well, and they are much more accurate. Higher. And then we've got the riding lawnmower, where the factory overhead is much lower. Make sense? So when we used the single plant-wide rate, we had $800 per either unit. When we went to the multiple production department, it was a little higher with the snowmobiles and a little lower with the riding lawnmower. But guys, when we're doing activity-based costing, we're probably targeting our costs pretty tightly. Okay? Which of the following would not be considered a manufacturing activity cost pool in activity-based costing? We don't care how many employees are in each department, do we? We're looking at inspections or hours or machine setups, okay? Activities, just the number of employees means nothing as to activities, what's really going on. So, Isama Foods uses activity-based costing to determine product costs. For each activity listed in the left column, match an appropriate activity base from the right column. So, for example, cafeteria, what would be a good base? Well, number of employees are number of employees who regularly eat in the cafeteria, right? Customer return. See, we're trying to see what creates the cost. People going through and eating the food, right? Customer return processing. Oh, where's the customer? Maybe I left the customer return processing off. Electric power, kilowatts used. Human resources, number of employees, that would make sense. Inventory of control is the activity. What would our base be? Inventory transactions. Invoice and collecting, number of customer orders. Machine depreciation, the activity base would be machine hours, that's logical. Material handling, how many moves did we have? Order shipping, customer orders. Payroll, number of payroll checks processed. Performance reports, number of performance reports. Production control, production orders. Production setup, number of setups. Purchasing, it's logical. Okay, quality control, sales order processing. Makes sense. Friedman sells consumer electronics over the internet. For the next period, the budgeted cost of the sales order processing activity is $875,000, and 50,000 sales orders are estimated to be processed. Determine the activity rate of the sales order processing activity. And then determine the amount of sales order processing allocated with 28,750 sales orders. Why don't we just try this real quick to see if you're getting it, okay? Let's just take 2 minutes, okay? I had another client this week. They got an IRS letter. The husband had a W-2 of 55,000 they forgot to give me. So she's really mad at me. Well, you should have known. I said, well, you didn't give it to me. Well, you should have known he didn't make just 13,000. I said, well, the year before he only made 9. You don't want to be rude, but you just want to go, shit. I've been doing your taxes for 25 years, and this guy can average, 2 to 3 jobs a year. I mean, he's like a professional. But in 21, he only made 9,000. So in 22, when he only made 13, I'm thinking, yay. So, I mean, so she was just furious. Well, you should have known. You just kind of try to zip your lip. Some days it doesn't work that well, does it? But sometimes you just got to zip your lip and go, I'm sorry. But you don't want to take responsibility for what they didn't provide. Anyway, what did y'all come up with? The activity rate. Anyone? 1750. Who has 1750? Oh, yay. 1750 per sales order. And you can see if we're at 28,750 sales orders, the amount. Does that help, guys? Okay. Body Solid Inc. manufactures elliptical exercise machines and treadmills. The products are produced in its fabrication and assembly production departments. In addition to production activities, several other activities are required to produce the two products. These activities and their associated activity rates are as follows. The activity base usage quantities and units produced for each product are shown over here. Use this to determine the total activity cost and activity cost per unit for each of the products. So you see, we're producing a lot more elliptical machines than we're producing treadmills, right? And the machine hours for the treadmills are a lot higher, even though we're only producing about 60% of the elliptical machines. We've got a lot more cost into these treadmills, don't we? Just a lot more hours for 250 treadmills than we do for the elliptical machines. So we see the breakdown: fabrication, assembly, setups, inspecting, production scheduling, and purchasing. Okay, so if we take in for elliptical machines, we're going to use 500 machine hours. For treadmills, 700 machine hours. So if we take the activity rate here, fabrication, we know, assembly, we know, setup, it tells us, the inspections, it gives us $60. The product scheduling, that's a product order, and the purchasing. Do you see here the total activity cost for ellipticals? $27,300. But since we're producing 500, our activity cost per unit is only $68.25. Where do you see with our treadmills? It's almost it's over 2.2 times the amount, 2.3 times the amount that our elliptical machines cost, the cost we're allocating to them. Does that make sense? Selling and administrative expenses can be allocated to products for managerial decision making, such as looking at product profitability. One method of allocating selling and administrative expenses is based on sales volume. But some products can consume activities in ways that are unrelated to their sales volumes. When that happens, activity-based costing would be a more accurate method of allocating. So here we've got two products, Ipso and Facto, and we've got different activities based on Ipso and Facto. Ipso is easy to use. Facto requires training. Well, when Facto requires training, guess what that means? More hours are spent on Facto. If so, product requires no technical information. Sounds like a wonderful product. Facto, product requires detailed technical information from the customer. Oh boy. Promotional support. This requires no promotional support. This requires extensive promotional support. Order entry. This is purchased in large volumes. This is in small volumes. Customer return processing. Few customer returns, lots of customer. I mean, can you just see where this is going right now? Shipping document preparation. This is shipped domestically. This is going through customs. And I guess they just removed the tariffs on China, but you know, nowadays we don't know what the tariffs are going to be anymore, do we? Shipping and handling. This isn't hazardous. This is, I mean, wow. Field service, few warranty claims, many warranty claims. You just look at this and you realize, hey, these need to be broken down by activity, just based on the complexity of this product. Abacus's field warranty service activity has a budgeted cost of $150,000. If there's 100 warranty claims estimated, and we use warranty claims as an activity base, then we've got to show $1,500 per warranty claim. That alone ups the Facto's cost. Gordon Gecko Furniture has two major lines. Commercial, few large orders, little advertising, shipments and truckloads. And then there's the home office line. Okay, I don't think I put the home office line in here, sorry. So we've got the commercial and we've got the home office. The commercials double what the home office sales are. The selling and administrative expenses are allocated to the products on the basis of relative sales dollars. Evaluate the accuracy of this report. Well, I didn't put in here, but the home office furniture is more complex. So basically, the selling and administrative expenses should not be allocated based on the relative sales dollars. The two product lines have very different attributes. The commercial product line is easy to sell, while the home product has all kinds of costs associated with it. So allocating selling and administrative costs using sales volumes isn't appropriate because too much is going to get allocated to the commercial division, and yet more attention and activities are going to be spent on the home office line. Okay, so basically, just because we're doing sales volumes doesn't necessarily make that the right choice. Okay, let's see. Let's look at this one. Metroid, am I doing okay for time? Metroid Electric manufactures power distribution equipment for commercial customers, such as hospitals and manufacturers. Activity-based costing was used to determine customer profitability. Customer service activities were assigned to individual customers using the following assumed customer service activities, activity base, and activity rate. So we've got bid prep, shipment, support standard items, and support non-standard items. So these are different activities. You know, the bid preparation, number of bid requests, and they come up with an average of what these costs are. Assume the company had the following gross profit information for 3 customers. So we see the revenues, we see their cost of goods sold, and we see what we receive their gross profit to be. But Here we see, based on customer 1, 2, and 3, how many bid requests they had, how many shipments, how many of the standard and the non-standard. So I'll just tell you right now, customer 3, even though they look like they are making money from customer 3, I bet by the time they apply these activities to this loser here, that they're going to be losing money. You know, it's like, go away, find someone else to do your, get what I'm saying? Because guys, you just see, look at this. Look at the bid requests, the shipments, the non-standard items. All that costs money. Prepare a customer profitability report showing the operating income after these customer service activities, the gross profit, a percent of sales, and then the operating income after. If you look at this, do you see when you really look at the various activities, the bid preparation, the shipment, the support items, the non-standard, look at the cost of these activities. And then you see really what, this is what they showed as a percentage of sales, but look what it really is. Does that make sense? How the more we take just generic big numbers, we're not really getting a clear picture of how we're making money. Or we could even be losing it. Interpret the report. The gross profit as a percent of sales, that customer 1 was the least profitable. It wasn't true. Customer 3 looked like it was the most profitable, but then once you start taking these activity costs into play, customer 3 consumed much more customer service activities than customer 1 or 2 did. Customer 3 ordered non-standard products that required specialized bids. They had more shipments, which meant more smaller shipments. Customer 3 sounds like a pain in the butt. Or maybe they just need to up their fees, okay? Many service companies use activity-based costing. This hospital uses activity-based costing to allocate hospital overhead to patients. You identify the activities, figure the rates, and then allocate them to the patients. Here are the activities they're coming up with: admission, radiological testing, operating room, pathological testing, dietary, and laundry. So for every admission the hospital gets, they're going to allocate $180. For every testing, x-ray stuff, $320. Operating room, $200 per operating room hour. Pathological, $120. And dietary and laundry, $150. That's how they determine the needs are going to be allocated. They have budgeted costs for the radiological testing with 3,000 images. So you can figure that's how they're coming up with the $320 per image. Remember, guys, these are estimated. That's what they're budgeting for both the cost and how many activity hours. You know, this is all based on past records, past information. So when you do this, and Miss Mia, the overhead cost allocated to this chick was $27.90 based on 1 admission, 2 x-rays, 4 hours in the operating room, 1 specimen. She was there 7 days. That's how they allocated the overhead. Okay. So you got 3, or you've got Mia, and then you're looking at these others. Mia's operating income, when you look at the revenues that she brought into the hospital and the various costs, she ended up with, or the hospital ended up with like a $300 profit on her. But let's just look at some of these. Mr. Barini looked like, they brought in the 21,000. He looks like a sick puppy. So they made 21,000 off of him, but look at what he has. He's been there a long time. Dietary and laundry, the operating room. He must have had a couple do you understand? As you allocate, this Barini lost money to the hospital. Now that's hard to believe because of the fees of a hospital, but you get what I'm trying to show you. So when you do it based on activity and what the costs are, you really see what people are needing. I think of these two little nieces, great nephews of mine in the hospital. I think they've been in about 23 days now in NICU. I mean, can you even imagine the cost this is going to be? These babies finally got back to 3 pounds. I mean, they were like 2 pounds. It's just so sad, but it sounds like they're going to be fine. But the care, I bet their bill, I don't even want to guess. But it's in the 7 digits once they're gone. Scary. But you know what? Hospitals have to do that. Hospitals need to put the money for babies. That's why when you're 85, maybe they don't perform the test they should, because guess what's going to happen to them anyway? I mean, you have to make decisions. That's a whole nother subject of ethical decisions, but you gotta save these babies. They have a whole life to live. Moving on. Crosswinds Hospital plans to use activity-based costing to assign hospital indirect costs to the care of patients. The hospital has identified the following activities and activity rates for the hospital's indirect costs. So basically, they show the various items here. Well, this makes more sense, $1,000 per operating room hour. Anyway, you see these two patients and the various activities that were performed. And based on that, you can come up with what is being assigned to each patient. Does that make sense? Why is the activity cost different for the two patients? Well, Mr. Abel here looked a little sicker than Miss Cheryl, huh? You guys get it. I want to be able to load this before I get done, but no, this helps improve the cost of products. That's why you do activity-based costing. As we've said, it's definitely going to be more expensive to create and to install and to keep up, but your products are going to have a better end result. Any questions before we end, guys?